Air Forces has announced that a flying disc has been found and is now in the possession of the Army.
Over. CBR Street Gang, over by standing by, over.
All right, let's get the microphone check out of the way here before we get rolling. Let's see. Even know if you can hear me across the various chats going on right now. We have x.com, we've got YouTube, we've got Twitch, and we have some private chats going for people that cannot join the live streams. Let me know in those chats if you can hear me okay. And we're going to get started in about a minute. All right, it looks like you guys can hear me okay. We're going to get the music under control and get rolling here. Hello and welcome to Landy's Crypto Corner. Today is February 2nd, 2024. And we are staring at charts live today. This is our Friday technical analysis live stream where we take a look at the Bitcoin and other charts, that being usually Dixie, gold, and traditional markets. And we can see that Bitcoin on the daily here is kind of playing in and around the upper first standard deviation of the Bollinger Bands here at roughly $43,000, currently trading slightly below. There was a fairly large spike up in early price action today at just after market open here in the United States. I do suspect that that was a bit of a, it was a bit of a sell-off, and market makers have to take the other side of that trade, so it got pushed up to the zone at the top side there for liquidity purposes, and then we see Bitcoin back around that upper $42,000 to $43,000 area again. Now, if Bitcoin is going to, stay fairly bullish on this particular move off the lows, we do need to see it stay above the basis band here, which is right here by the prior swing low from yesterday. And that is coming in at around 41.8. If that area is lost, then I would be targeting right down to the lower first here in the mid to upper $40,000 region. So that's roughly 40,600 to 800 or so below there. And I would target right back down to the lower second at around 39,500. That is slightly above the close open here. So it's more towards 39.6 at this point. Actually, no, it's not. It's at 39.540. The close open is slightly below it at 39.524. So if we do see price trading down there, I would expect the lows to get ran again. If it does trade past that area below the lower second down to the lower third here at the monthly at 38.5. And if Bitcoin can get a close above this wick high here from the downtrend at around 49. It's going to be one of those days, guys. At around 43,569 even. And, if we do see Bitcoin trading above there, I would expect it to trade around its current highs, close to $44,000. If it can trade above $44,000 and specifically above the upper second standard deviation, that would put it above the high side of the tighter consolidation prior to the deviation to the upside and the downside here. And I would expect, $44,500 to $45,000 at the close here to around $46,000 at the high above there. And I would target around the monthly at $47,000 to the wick high at 49, possibly into $50,000. Now, when looking at a support and resistance chart, we can bring it over to our Bitcoin in 60 seconds chart, typically shown on the Bitcoin in 60 seconds shorts videos here on YouTube and on x.com under CryptoLandy. We can see that Bitcoin is trading right in the weeklies here, after a deviation of them to the downside. We saw the recovery of 41.8 at that weekly there, move right back to the top side around that 43.2 to 3 area. And then it's just kind of trading in between after a nice test down to that 41.8 area in yesterday's price action by the basis band. Now, if Bitcoin were to, move through this area to the downside, then it would be playing in between the 41.8 and 39K weeklies here, possibly back down to that monthly at 38.5 at the wick low. And then, of course, if it does trade and start closing above this weekly here at 43.2 to 3 and take out that wick high that I just pointed out at 43.569, then it would be playing roughly between this weekly here at 43.2 to 3 and the monthly at 45.5. Now, we have not seen any closes above this monthly zone at 47,000 and that 45.5 area. If we did start to see daily closes above there, I would look, for those wicks to generally get ran, around that $48,000 to $49,000 or 48 to 50 if you like. Above there, we're looking into the mid to low $50,000 region. Now, if Bitcoin were to break down from this monthly at 38.5, there's that big zone down here in this weekly area that was, the monthly was tested right there at 38.5 as resistance and then again as support. So if it moved through that area to the downside and specifically got some closures down there, then I would generally be targeting this big weekly zone at 37.7 to the weekly down here at 36.2 to 3. Below there, I would step that down to the next monthly here at 35K and the weekly just below it at 34.750. And I've pointed this out a lot, but this area was tested as resistance first and then tested as support, short term, kind of traded in and around it, found that weekly area as support, and then wicked right back to it prior to the moves up to the monthly area where it had found pretty strong resistance again. So this big weekly zone, we did see quite a few candles closing in here. So that would be a big area of interest if Bitcoin did break down from the current deviation lows. We're moving into the weekend. I'm not necessarily looking for large moves, but they could happen. We have seen them really get rolling, end of Saturday into Sunday towards the weekly close. And if we go back to our cleaner chart here without support and resistance, we can see that the daily momentum pivot of Stoke right now this is a regular Stoke, not a Stoke RSI. The Stoke on the daily is pivoted at 42,300 or so. That does mean that if Bitcoin closes below there, we would see an initial cross down at the very minimum. If it closes substantially below there, we would see both a K and a D cross down, indicating a momentum shift for Stoke. But we would still need to see this wick low at 41.8 dropped, which is a swing low. So we've got a swing higher high to break the downtrend, and then we have a swing higher low set right now. If Bitcoin is going to set a closing higher low, I would want to see it back above the 43,300 close open at this higher high on a close that broke the downtrend as well. So, if it does fall apart here, I would generally be looking around the consolidation lows, somewhere in the mid to upper $41,000 region. Below there, like I said, into the mid to upper $40,000 region. And if that area is lost again, a test of that deviation low again and possibly and probably lower. I'm not really looking for, big bad sell-offs through the weeklies that I just talked about and the monthly at 35. Main reason why, when looking at the monthly, which just got its close in between our live streams here. Last live stream was on Wednesday, And then yesterday, staring at charts pre-recorded video, I did cover the monthly here, but let's review it really quick. The monthly did get a close above the upper second standard deviation. That is something that we were looking for to pull that upper first up in a more aggressive upside angle here, and the basis as well. So we have a nice aggressive upside angle here. Around that 2 o'clock position is where you want to see it. We do have expansion of the Bollinger Bands here as well. And to go along with that, we have volatility expansion. So that does mean that if Bitcoin is playing below the upper second, though, which it opened below it because the upper second moved past price on a close, that's roughly around 44,200 or so. If Bitcoin is trading below there, that does make the upper first standard deviation available. And that just so happens to be right in that 36,000 to 36,002 to 3 weekly zone. So, 37.7 to 36.2 is fair game even down below there. We have seen wicks below. Now, of course, I pointed this out many, many times, but for those that are new, we have looked at this quite often, but in Bitcoin's history, we have had 3 major bear markets. There could be arguments to be made that there was shorter term time frame downtrending bear markets on the monthly, but they weren't really significant. We had this back here in 2011 into 2012, but this was not really a bear market. We weren't making, significant lower highs, and this was more of a parabola with a consolidation and sideways and up consolidation in higher low fashion on the monthly. There was swing lower highs, but the first real closing bear market lower high came in 2014. And what we've observed in price there, and this is something you're going to find across various assets and indices, but typically on the monthly time frame, when you get a bear market lower high on a close, not a swing, but a close. So in this case, we saw this swing high and bear market lower high confirmed in 2014 in the month of September. Now, Bitcoin came down through 2014 into 2015, set a macro low, followed by a major low, followed by another major low, which solidifies the first major low as a macro low. It got compression of the Bollinger Bands here, and then it came up and swung the bear market lower high. It subsequently, after swinging the bear market lower high, it was already in a bit of an expansive phase, but it came down and tested around that upper first standard deviation and closed in between the upper first and upper second before moving on to a new all-time high. We saw this again in 2019. So we had the 2017 all-time high. We had some lower swing highs and lower swing lows, but the first real closing bear market lower high was here in 2019. That was solidified in the month of September of 2019. We then had this major low confirmed as a macro low when the major low in 2020 came in. We did not see, in this case, expansion just yet, but typically what happens with Bitcoin in this case, as you'll note, we're going to look at the most recent example, but we did not see expansion, but heading into compression and then subsequently expansion, we saw the bear market lower high close get swung. Bitcoin came back down to the upper first standard deviation before getting expansion and proceeding to a new all-time high. And then, of course, we have the 2022 bear market lower high on a close that was confirmed in May of 2022. And we have seen Bitcoin come down, set a major low, and then we had another major low set on the monthly, confirming the prior major low as a macro low. And what has Bitcoin done so far? Well, this time it got compression, just like in 2016, to expansion. It has now swung the bear market lower high. And if it's going to play out anything like it has in prior cycles. And as you can observe in many assets and indices on the monthly time frame when evaluating volatility of the Bollinger Bands and structural volatility as well. But in this case, that does make the upper first standard deviation a viable target down there in the lower $36,000 region, possibly even a wick down below. Maybe the monthly over here at 35K gets hit or lower. That is still on the table as long as Bitcoin is trading and closing daily candles and weekly candles below the upper second standard deviation there at around that 44 to 44.2 region. Anytime that we've seen expansion kick off on the monthly time frame and just about any asset or indice, Bitcoin included, we have seen it, we've seen it go on to make new all-time highs pretty shortly thereafter. Now, when I say pretty shortly thereafter, I am looking at a monthly time frame. So, it can be a bit agonizing on those lower term time frames below the monthly. But as it stands now, Bitcoin looks pretty good. Let's go ahead and check the momentum pivot here. It has updated to 39,426. So this is within the local deviation of the range. So the most recent downside deviation at 38.5. We do have a momentum pivot right in there for the monthly. That does mean that if the monthly were to cross down, my view of this, because it is a regular stoke, would be that, well, in general, I'd be looking for it to cross down and then reset bullishly. I'm not really in the camp of it crossing down and having to come all the way back to the oversold zone. And we often see the largest moves in price when any asset or indice enters the overbought and or oversold zones. So back here in July of 2022, we saw Bitcoin on the monthly get into the oversold zone. And if we were to go ahead and look at how that kind of lines up, let's go ahead here. We can see that it was right against the lower second standard deviation. Of course, when it gets in there, we see the move down below those lows there once it's in the oversold zone. So really starts to touch the edge of the oversold zone in July. And then in August, September, October, and then November, it finally gets that bigger move down to what is now the macro low, coming in around that $15,500 here on spot price. So, with expansion kicking off, positive slope on the upper first and basis band, big moves down, I'd be looking at as opportunity. Of course, that's not financial advice, but it's kind of like fuel for the big macro time frame bull run. Now, when looking at the 2-month here, we can see that, of course, this is going to close with the February candle, and the upper first standard deviation is kind of the number that bulls want to see beat. That is coming in at around $48,000. It's $47,800. If Bitcoin were to start trading up towards that upper first, you're likely to see that number update to around 48 in between now and the 2-month close. So that would be the next big area for the bulls. To the downside here, you can see that the basis band is coming in at that monthly area right around $35,000. In this case, the basis is above it at $35,400. Now, if Bitcoin were to trade above that $48,000 region at the upper first, in this case, it still needs to get past this wick high at 48,240 that was just swung. That's the monthly bear market swing high from 2022. And if it did close above there, then I would be generally targeting back around the closing highs on the 2-month chart here at roughly $60,000. Of course, above there, you can see that we have compression, very quick compression on the 2-month time frame. Above there, I would be targeting the wick high around $69,000. and beyond to brand new all-time highs. So that is kind of my view of the 2-month. Now, of course, we will shortly thereafter be watching the 3-month. This is the quarterly, of course. And the quarterly upper first standard deviation is kind of where Bitcoin is hanging out right now. And as long as it's trading and closing candles above the upper first here at roughly 42,400, then in general, that makes available the upper second standard deviation. Again, this is coming in around $58,000, so we kind of have a range between the quarterly and the 2-month. But of course, the quarterly needs to meet the criteria of closing above the upper first in order to start targeting around that $60,000. Well, in this case, the 2-month needs to close above that $48,000 region to start targeting 60, whereas the quarterly here needs to close above around this 42,400. And as long as it is doing so, that makes available the upper second, which is a little bit lower than the upper second on the 2-month because we're starting to see the compression is a bit more sideways and up angled on the 2-month versus the monthly. And in this case, I would generally be targeting around $58,000 to $60,000 between the two. Above there, the all-time high, right around the upper third there at 69 to this upper third standard deviation in the mid to low $70,000 region, currently coming in at 73,400 or so. Now, the basis band is something to be aware of on the quarterly. So if we do start to see the monthly and 2-month really pull back aggressively, the basis band on the quarterly is a primary target, currently coming in around $26,900, $27,000 or so. You can kind of give it a range there, right around the quarterly close open here at, it's $26,961, so around $27,000. And as long as it's closing above the wick low here, which does mean that, of course, things could always wick lower, but as long as it's closing above 24,900 on the quarterly time frame, and generally looking up and to the right. I do know that a lot of bears are looking for this to become a quarterly lower high over time and then take out this low at 15.5 and target that lower first area at around, $11,500, $12,000 or $10,000 to $12,000. I don't really see that as being a viable target currently, especially if the quarterly is closing candles anywhere above the basis band, because this will continuously move up. As long as Bitcoin is closing above that basis band, you'll see that lower first standard deviation begin to catch up. And when it really does catch up, let's go to the index here because it's a little bit more data here. It's one of those things where, we had back here when we first had the rundown to 15.5, we had people targeting all the way down to, the lows over here. But as soon as price moved away, you see what happened to the lower first. It moved right past the lows here in the, $5,000 to $8,000 region and has legged up pretty significantly as the quarterlies have closed and reversed to the upside here. So we had, the 15.5 now seems like it was ages ago because it was 2022. But at the time, when it closed below the basis band, just about every bear on the planet was like, well, it's going to go and test around $6,000 at this close open down here, but totally ignoring the fact that there's, that $11,000 to $12,000 high region right here, and it would still need to close below this quarterly high at $14,000. It's $13,800 to $14,000 depending on your chart. Just not viable targets, really. Pretty major supports when you see two big highs there to be looking for the lows immediately instead of at the high supports, especially since they've been tested. I would actually consider this a test, 15.5, because some derivative exchanges did test down into this close open. They did test down into that, 14 and 13.5 area on wicks at the very minimum and slammed right into that quarterly close open back there. That being from 2017. But yeah, looks pretty darn good right now. I know that there's a lot of bearish sentiment in the markets, but price has to come down to get liquidity, and of course it will blast off when it's ready. And in this case, Bitcoin is in a range. We can get a good idea of what this range looks like when going back to the monthly here. We can see that all the closes have come inside of this candle here. We have had wicks outside of the top side of this candle from December of 2023. But if you want to get a general idea of the volume profile up here, we can. And we can just use the fixed range volume utility here, pull that over, and let's make sure that we have the proper here. So volume area, 70%, 124 bars is fine. Just want to make sure extend right is on. Yep, good. So let's go down to the daily now. When looking at the daily here, you can see that when taking that, the closes are all inside that December candle as it stands right now. But in this case, we have deviations to the top side technically. The December candle started back here, right? So December candle started in the area that was just tested. So liquidity was grabbed from the $39,000 closing candle here. So after 38.5, which is these highs right here, so 38.5 monthly was tapped. We then saw December 1st, that candle moved through the monthly at 38.5 and and tapped right on the weekly at $39,000 exactly. So we saw that the November highs were tagged at 38.5, and then a reclaim of this candle in December 1st specifically. We've had a couple deviations of the value area highs here and a deviation of the value area low. Bitcoin is currently trading back above, at least as it stands right now, the point of control for volume here in this current range. So it's literally at the midpoint. It's at equilibrium at the moment. And this is coming in at, well, right around 42.6 to 700. And if it is trading and closing above there, regains that upper first at around 43, that would make available the value area high, which is right around where that upper second standard deviation is coming in at $44,000. It's coming in slightly above there at around 44.3. So again, we're getting quite a bit of confluence on the upside here, just in this tighter range here. So basically break out of the highs. We're going to look for these deviations to get ran. 45 to 46, 45.5 area at the monthly, and then $47,000 up here, which is another monthly to that swing high of the bear market at 48,240 and wick high at 49K. So you can kind of see how that fits together. One of the big things to be aware of today is we do have the 3-day closure coming in. Let's go ahead and get rid of the volume profile there. The 3-day is starting to get compression. So this is something that is often pointed out by myself here, as we do have a bit of a system. And that system is the 4 key pillars to trading. That is trend, support and resistance, volatility. Those 3 combined create the 4th key, which is momentum. So in this case, we see volatility compression. Now we saw a volatility uptick, but this was volatility in the context of compressing Bollinger Bands. So rising BBWP after a big, beautiful 3-day expansion to the upside, and then mean reversion, come back and reverse off the lower second and third standard deviation area. In this case, right into that lower second standard deviation reverse, and then come back and play around the basis band, thus getting compression. Very nice, deep compression here. That does mean that if Bitcoin were to test into that lower second again at $40,000 and start to close below there, right below the close open here, which is right where the lower second is, That would make available the wicks as the next big target here into the next area of support, which just happens to be the monthly at 38.5. Any closures below there, and we would start to see expansion on closes below the lower second, but the criteria would be that if it closes below that wick low, we're looking for continuation into the bigger areas of support down here. Again, that's the 36.2 to 3, where the monthly basis band is, to 37.7, where the weeklies are. So that's 36.2 has the monthly basis band as well as a weekly, and then 37.7 is a weekly area as well. So in this case, I would generally be just looking to step it down to that area to grab some liquidity. Back to the top side, back above the upper first here at around $44,000, I would target the upper second, which is starting to come in at 45 to 45.2. So right there around the monthly at 45,000 to 45.5. Dailies at 45,000. There's a closure up there. And then the monthly at 45.5. Above there, I would start to target the high region. Upper third is starting to come in at 46,500. We would need to see a closure above the upper second, and then Bitcoin has some work to do, because in order to continue, it would get expansion, but it would be right into prior resistance up here at around this $46,000 to $49,000 wick high. So the close at 46 to 49 at the wick. We would need to see that close open reclaimed and closed above, which would then make available the wick high here, or wicks in order, around 48 to $49,000, possibly 50. It needs to close above $49,000 to get significant expansion of the Bollinger Bands here and BBWP. Now, the nice thing to kind of gauge where things are coming from is Stoke. And in this case, it is coming from the low side in the bearish control zone of momentum. On any closures today above 40,330, we would see that fully confirm and cross back up. A secondary signal would be on RSI here. That would be a cross above the SMA or a cross into it. Would kind of paint the picture that if Bitcoin can maintain its structure on the daily, possibly put in a closing higher low, not just a swing higher low, then I would be generally targeting a move back up to that deviation top side of the range. And in this case, the SMA is currently coming in at 43.9, which was tested in yesterday or the day prior's price action there. So any closures above there, of course, also closing above 44K, would lead to some tests higher at minimum in the lower term time frames. And then we look for closures up there after. If Bitcoin were to fall apart, lose its basis band, I would generally be targeting somewhere around the midline of RSI here. That's coming in the 40,500 area. So again, the mid to upper $40,000. And, generally speaking, if it was doing that, it would be below the lower first on the 3-day, and I would be targeting somewhere around the lower second over time, which is at $40,000, just right there at the close open structure. Now, I did want to look. Do we have a 2 days coming in? Yeah, the 2-day just opened, and it is above the basis band, much like the 3-day. You want to see it remaining above there. Otherwise, below it would make the lower first standard deviations viable targets. So below the basis here, which is coming in at 42,850 or 840 in this case, I would target the lower first. That's at roughly $41,000. Lower seconds coming in just below the close open here at 39,500 at 39.2. Below there, the wick low at 38.5. Of course, if we did see closures below there, same criteria. It needs to close below the wick low in order to start looking lower and really kick off some more aggressive expansion down into this structure here. Same thing goes for the upside. Need to get above the local resistances here, the wick high at around 43.8 to 900. Take out the closes at around $44,000 to go test that upper first, which is at 44,660. Above there, we're looking to the upper second, which puts it just around these wicks at around $46,000 to $46,500. Above there, of course, we're looking for the highs to get ran at $47,000 to the wick high at $49,000, somewhere in that zone. Now, the 2-day is pivoted at 39,600. So if we do see that area close below, very likely that things are going to go test that deviation low, possibly lower. Just be aware that if it doesn't break on a close, it may just reverse. So same for the upside moves. If they don't break on closes, probably looking for at minimum short time frame reversals to rejections and then right back into range. All right. I think that's about all I have for some of the longer term time frames. Let's look at the 12-hour here on Bitcoin. So Bitcoin is above the basis, tested that upper second standard deviation here of the Bollinger Bands, and then coming back down to the basis is actually what you want to see. So we got expansion into the lower second third zone, reclaimed the lower second here right after spiking in there, then reclaimed the lower first after going sideways for a couple days, and then moved right to the basis and then right to the upper first. Stayed there for a little bit, spiked the upper second, deviated the upper first, spiked the upper second again, and now it's basically in a 12-hour consolidation above the basis band, testing this upper first area. As long as it is in this area, the upper first there at 43,200, 100 to 200 to the basis, around $42,000 is fair game. Even down below into the weekly there at 41.8 is also fair game. Below there, we're looking to the lower first at around $41,000. Below there, of course, we've got the lower second coming in right at this consolidation after the deviation of the lows at 39,800. Below there, we're looking for the lows again at 39 to 38.5. If we do see Bitcoin breaking out above this structure here, you can see the upper second standard deviation is at 44,230. So we do have some confluence across the time frames for that low 44K region as being at minimum short-term time frame resistance. And then above there, we'd be looking for expansion back up. In this case, I'm not looking for too much more right now. If there is bigger moves over the weekend, I suspect that we wouldn't see follow through until the next week opens for traditional markets. In this case, we can see that 43,270 is the momentum pivot on the 12-hour. Moving that down to the 8-hour, we're looking at a possible cross back to the upside in the next 8-hour closure on any closes above 42,500. So Bitcoin is currently trading right around $43,000. We can see that there is a nice, we saw expansion, a little bit of compression, and then expansion that rode that lower first standard deviation down. So a little bit of continued expansion, the throwback to the top side, upper second, upper first area. And then now we're seeing a cool down again. So on the 8-hour, whenever we see closures above the upper second, basically that break the local highs of this move at around that 43.8 to 44K, we would see re-expansion to the upside plus a break of overhead resistance. There is a nice wick over here at that upper third coming in that low $44,000 region. Of course, if we start to see closures below the lower second, that would break the lows of this consolidation range. And generally speaking, we'd be looking down to the close opens down here in the mid to upper $40,000 region. And then, of course, the 39.5 to 40K, 38.5 to 39K down here. Pretty easy, straightforward stuff here. Bitcoin not looking crazy here on RSI. Nothing really bearish, nothing really bullish about this. It's in the neutral zone between the bullish control zone and the bearish control zone. But keep in mind, when it is above the 50 read, it's generally considered more bullish than bearish. If it does drop that area, though, I'm looking at the low side of the range. See that bearish control zone is right there at 40,800. So basically the lower second standard deviation zone. If Bitcoin were to start moving down and getting expansion. It'd be right into the edge of the bearish control zone of RSI. The 6 hour also getting compression here of the bands. We do see that it is turned up here on any closes above 42,636. So basically 42,6 to 7. Above there on the next 6 hour closure, we're going to see continuation of upside momentum. And, looks fairly good right now. We'll see what the rest of today holds. The 4 hour is the one that you might want to keep a closer eye on, though. It is pivoted, rather, as I try to spit that word out after chewing on it for a moment. The 43,000 and 43.1 area is technically going to be the pivot if price starts to trade back up. And that is going to be, that would even be below the upper first. So in the next closure below 43,100, the 4 hour, in about 45 minutes here, the 4 hour will get a cross down. Not really seen as a bearish signal until we see a full cross down, and Bitcoin losing the lower first standard deviation here, which is coming in at 42.5. Then we're targeting this low right here. Again, this is the consolidation after the deviation. So I would be looking for at least short-term time frame support there at $42,000 to 41.8 at the weekly, and then come back to it later. If Bitcoin does start to trade back above the 4 hour upper first here at 43,350, then the highs of this local move and range are in play around 43.8 to 44K. And of course, above there, we're looking for expansion up into the areas that we spoke about earlier. Not too much more to say on this for the lower term timeframes at the moment. We can always come back to it if there is some questions. Let's go ahead and look at the taker buy sell ratio. It's about neutral right now, so not much to be made of that. Let's go ahead and look at open interest. Open interest still in a bit of an uptrend here, as Bitcoin has been in a smaller uptrend here on the hourly as well. It's going to start compressing on the hourly. If we start to see, it is technically a little bit of a bearish signal on open interest right now, but it's nothing crazy. It's like very minute. Let's look at the daily and see if we can get some better context here. So we are seeing that OI is trading around where it was at 38 to 38.5. So basically the deviation low. So we haven't seen a significant, we've seen that Bitcoin came down and held support at the same open interest levels while maintaining a markup on price. Means that spot is doing the work here in terms of the markup. So, in general, we'd be looking for a spot and derivative sell-off that breaks 38.5. If that doesn't happen, it's likely going to range, and then we come back to it for a resolution later. We see that the daily is set up in a bit of a range as it is, with that lower second there at 39.5 and that upper second there at around 44K. That does mean, again, closing above the upper seconds right into resistance. So it does need to get above that resistance to get volatility expansion to the upside and maintain it. And then same for the downside. It would need to get through the supports there while closing below the lower second to maintain volatility expansion to the downside targets. So not too much more to make of what is currently going on, just trapped in between the weeklies here. All right, I'm going to take a moment to take a sip of water here and look at the chats, and then we're going to get into some fun stuff, like Dixie, just wiping out a whole bunch of Forex traders. We'll take a look at gold, and then we'll take a look at traditional markets, which were doing pretty well the last time I looked at them. We'll see if they sold off coming into the latter part of the session today. But let me go ahead and cover for the silence here by turning on a little bit of music here in the background while I read the chats here and take a drink of water. Let's go ahead here. All right. Hello, Bobby, Spin. I see quite a few others hanging out in the chats. If you would like to come down in and hang out with us, go ahead and subscribe here on YouTube, and you're free to chat. It's only subscriber gated because bots come in and start pitching stupid stuff. And for those of you on Twitch chat and x.com chat, the plugin for x.com for the chat does not work right now, and the Twitch chat plugin is terrible. And so if you do want to chat, head on over to Landy's Crypto Corner on YouTube. It is linked in my profiles, either on X or on Twitch, and then you can follow the link there, or you can search Landy's Crypto Corner. You can see that we're live right now. Click on it. You can sub the channel. Of course, it helps out. Likes help out. All that good stuff. Social media junk to grow and whatnot. But in this case, you can come down and you can chat with us here. I see that Don Renee is here as well. I see Jedi's here. I see Roka's here. Hello, guys. And then there's quite a few others. So if you do want to jump in and chats, come on and say hi to us. Let me look here. I think Bobby was referencing the quarterly at around that 26 to 27,000. That's where the basis band is, and it would still be bullish, absolutely. That was the last higher low on the monthly as well, 26.5. Or the weekly, it's 26.5. Is sound a little low? Can you guys let me know if the sound is okay? The streams are tuned a little bit lower, yes. They're tuned a little bit lower on the streaming setup because it is a different computer than I record on. So just trying to match it from my local location is very difficult as compared to my recorded videos. The 4 pillars, yeah, the 4 pillars of trading. The 4 parts to collecting money, not just money, but also Bitcoin. Yes. So Bobby says, I have a question, not actually for me, just in general. How would you derive a trading plan out of those 4 pillars? Meaning, what boxes would need to be checked in order to enter a trade from your perspective based on that 4 pillar criteria, being the 4 pillars being trend, support and resistance, volatility and momentum. The first 3 make up momentum. Bobby says, just assume I'm fairly new. Bobby is not new. He's asking questions for the benefit of newer people here. Thank you, Bobby. I appreciate it. I can get into that. Don says Dixie's having some reaction today. Weekly, monthly is turning bullish. It is, yes, on Dixie, in the context of bearish 2-month quarterly. But you know, if the monthly is bullish and it beats some of the pivots, we can take a look at in just a moment. You know, it's likely to hang on the highs and head back to maybe even its highs that it was at last year or the year prior, 2022, and a bit last year, I guess. Yeah. So how would I use this to create a trading plan? Well, I mean, trend is your friend until the end of the trend, and when the trend is unclear, everyone's in fear. And right now the trend is unclear because we have a trend break to the upside. So the only way that we are going to be looking for this to resume a downtrend is if it breaks below the current swing low. Would be a swing low, you know, downtrend to at minimum the deviation. So closing back below the 41.8 region at the weekly would break the prior swing low, and then we're generally targeting, you know, a bearish move down further, right? I would, you know, the swing lows coming in right where I would want to see the closing area for a high put in, and that's on the 29th candle here. That open at $42,000. So basically back below $42,000, you know, it's going to be around that basis, which is at the weekly at 41.8. So if it doesn't hold that area, we're looking down to the lower first. So that's one part of it. So that's where we have trend, right? We had a trend break, but this would be resuming at minimum the swing. This would be a consolidation, a swing into resistance, and then, you know, then it needs to either, you know, shit or get off the pot, right? It's either got to close above this swing high over here, right, which it has not done yet. This swing high has not been closed above yet. So it's either got to close above there and set a closing higher low, or it's going to take out its swing low and set a closing higher high, right? If it takes out the current swing low of this move off of that deviation low, then it's not bearish yet, because it's still a closing higher high break of downtrend. So at minimum, the next, you know, it makes basically everything below that 42 to 41.8 region available, right, in terms of support and resistance. So you just take it in order. You got 41.2 down here to 41K at the lower first, or the upper $40,000 region, which is coming in at the wick lows down there. So, you know, 40,500 to 41K, right? And then below there, you know, so you got a general zone for targets. If it takes out the swing low into, you know, mid 41s, if it's just going to swing it, but if it breaks it significantly, then you're looking to that area at 41 to 40,500. Below there, you're looking to the next big area at the lower second at 39.5 to the wick lows at 38.5. So if it puts in a higher low, this is where it gets tricky for some people, because this is a downtrend break, but if it breaks the swing low, it's going to head back down, right? But this was a trend break on a close to the upside. So you're still looking out for possible higher lows or equal lows. Even lower lows that do not pass this swing low are just fine, because they're going to throw divergence. But in that case, generally speaking, if it puts in a closing high here, we're looking down further for a possible into this area between, you know, the lower first, lower second, most likely, or maybe even around the lows for equal lows. We're looking for a higher low, because we did get a structural closing downtrend break. But if it were to pass the wick low at 38.5, we're looking for the downtrend to resume. This was a deviation of trend, so it would just be resuming the downtrend, because we had the daily downtrend on swings and closes. We get the daily deviation to the upside of a close. You know, we get higher low swings that then reverse, take out that higher low, head back to the lows, and then resume the downtrend below the actual deviation lows in this case. So it really would do a few things, right? It's all based on trend, but you're taking it one step at a time with support and resistance. Volatility levels are incorporated there. If we close below the lower second, you know, we will see volatility expansion, but one additional piece of criteria is that it breaks that wick low at 38.5, right? So then we get continuation of volatility expansion, and, you know, momentum will have already turned on any higher low swing, any higher low swing close below, right? So momentum coming from the overbought zone is going to turn down on any closures below 42,300. We start closing below this swing low, you'll see momentum shift, right? So we would have a swing downtrend, right? This, let's say tomorrow, this would be a swing high break of the downtrend, higher low, lower high, lower low, if it was to start wicking down below. So you would see a reversal in the swing chart, but still just keep in mind, closes below $42,000, it's still a higher high in place on a close. And the only way that we'd be looking lower is if we get a lower low close that takes out the wicks. Otherwise, we're looking for higher lows. So I hope that answers your question for you. I know you know this stuff, but it's always good, even for those of you that have a lot of experience, to kind of walk through that process again every once in a while. Let's go ahead and take a look at Dixie, because Dixie is wiping out Forex traders. I've seen a lot of very angry Forex traders today. And it's painting an engulfing candle right now, and a beauty at that, as it compares to yesterday's candle. Nice. It's a nice bounce off of that basis area, but again, you know, it headed right to resistance, right? So it hit our target to the upside at 104. That's what we were looking for. The upper second is now just above there at 104.10, to this area just above at 104.25 or so. So we've seen our 104 target get hit. 104.25 is the next big one. If we do see closures above there, or tries to trade above there on Monday, or even between now and closing today in post market, the next big area is 104.5 up here by the current daily upper third standard deviation and this swing high and closing high, which was a part of the downtrend here. So, you know, I'm not you know, necessarily in favor of looking for like crazy big moves to the upside, but we could see it. You know, it's definitely in an uptrend. It's definitely trying to come off the lows and put in some work. Only above 105 up here, which is a recovery of this low, would we really start looking up further to the next high side area, really the lows first, at 104.5, 104.60 to around the 106 area. But, you know, it's looking fairly strong. It's not doing too much for me though right now. Volatility is extremely low, but there's a giant candle. Well, why is that? Because it was in and around the basis band, and this is a move off the basis band. This is not, in my view, sustainable just yet. We have to see how Monday opens and closes. This is going to get, most likely, I should say, going to get a cross back up on Stoke. 103.80 would do that. It's currently only 13 cents above there, 14 cents above there. So, you know, we'll have to see where today closes, where Monday opens. The big thing is, you know, look at the weekly. We've been talking about this on Dixie. It's coming off the oversold zone. It's pointed up on any closes above 101.30. So it's pressure up from the weekly time frame. When you go to the monthly here, monthly is also pressure up from the 102.50 region. So generally targeting a move back to the basis. This was big expansion up to a range look here, which makes available all of the highs. So this is where I'm telling you, like, held support here on the macro time frame. So, you know, after the expansion to the upside, come back to the lower first, bouncing off that, you're looking for it to head to the basis, which is just under 105 there. So we have confluence. It's coming in at 105.84. If it does start to trade above there, we start targeting the monthly highs up here on a close at around, you know, the deeper 106 region, 106.71 in this case, to the wicks at 107.34, and then the upper first at 107.81 to 108. Above there, upper seconds right around the highs again. That's at 110. That's where the look could change significantly on the time frames higher than the monthly. But if Dixie does break down, really look for that back below 102 to break back to the lows, you know, somewhere around 99.5 to that lower second at $98.90 to $99. Below there, you know, we're probably looking, you know, a little bit deeper to, it's 99. It's like right there on the highs here. And then there's two highs there. It is trying to trade out and above this high from 2017. It is above it now on the monthly time frame at 103.82. you know, that's also the daily pivot for today, or right around that daily pivot for today. So this is where I could see Dixie ranging for a while, testing the lows, testing the highs. There are outside factors that could also influence this, you know, based on the Fed. So if we see rates getting cut, likely going to see downward pressure on Dixie here. The 2-month, though, did paint a lower high, and this is where this is seen as, from the 2-month time frame, as a bit of a pull or a throwback, right? Big bear candle. It did close below the lows, thus solidifying this as a lower high on the 2-month chart. It's going sideways. So upper first is kind of where I would be targeting if it does remain above the basis here. And that's coming in at 106.36. If it starts to push up towards that, 106.5. Momentum could shift as well above 105.20 in this case. 17, but that number is going to change if it continues to push up. Then we start looking at the quarterly. Quarterly is crossed down on any closes below 106.38. 40. 104.50 is going to be the upper first standard deviation. If it starts to get above 106.5 to 107 region, we're going to see all of the oscillators, you know, 2-month, monthly start to turn to the upside, and then we're looking for this to come back and run the highs. That doesn't mean that's going to happen, but right now it's in a bit of a transition phase. We can even go a little bit further out into the 6-month. And we can see that the 6-month is actually crossed up. So we have bifurcation. 101.31 is the big one to pay attention to there for the pivot. And then of course we've got the yearly, and the yearly is crossed down below 106. So again, above 106, 107 region, this is running the highs again. You know, from what's being indicated by the Fed and the Treasury right now, you know, it's indicating that this is likely to become a failure on any moves back to the top side. But, you know, we could also see it running with strength while they're cutting rates as well. You know, it's just a matter of, you know, Dixie is compared, it's compared to a basket of currencies. So in this case, you know, if it's doing, as long as it's doing better than them, it's going to go up. But, you know, if it goes down, you know, the classic take is risk on assets do better as Dixie goes down. Risk off does better when Dixie goes up. Not necessarily looking for that to continue, but never know. And you can see we have gold over here on the daily, still consolidating. This is a fairly lengthy consolidation for gold. It is known to do this for extended periods of time. We've had a lot of fun with volatility on gold for a while, so, you know, now it's in a bit of a cool down phase. Of course, it's still hanging around the highs. It's currently trading above, you know, it hit our targets to the upside for the upper second, even came through them and swung the highs that we were talking about. Again, it needs to close above these highs, high wicks up here, around that 2063 to 2066 bucks. It swung him, did not close above, closed equal, so heads back down to the basis there, but still trading in and around this 2030, 2036 support and resistance zone that extends down to the lower first standard deviation on the daily at around 2015 to 2020. Just kind of give it a range there. Below there, I would be looking to the lower second around the lows of this smaller, you know, move back down. Whereas we have a bit of a deviation downside target at 1980 to 1965. I'm really only looking for that if $2,000 is dropped, basically, and then it takes out the wick low there, And then we're looking, would also be taking out this high over here, which lines up perfectly with the close open of this lower low deviation. Next big area, step it down to, just under 2000 to that 1980 to 1965. If it can get back above 2055 to 60 bucks, generally I'd be looking 2000, 70 to 80 up here by the resistance. Above there, 2100 to 2150 at the wick high, and then come back to it later. All right. Let's see. Yeah, 2020 is the momentum pivot on the daily. It's a 2-day looking like. 2025, about 10 bucks above that right now. 3 days going to be closing mid next week. That's at 2026. 4-day is at 2054, downward pressure right now. 5 days at 2089. So basically the highs on a close. And that is closing today. So this is going to update with the weekly. And it should be the same pivot. Yeah, 2090. So this is probably going to come down into the top side, 2060 to 2070 at the highs there. And then we come back to it later. See what next week brings. Right now, it's just a consolidation until proven otherwise. Let's go ahead and take a look at traditional markets. Hey, look, they're doing pretty good. Oh, wow. Look at Dow. It's expanding. Just like I said, on expansion, Dow loves to hold that upper first, upper second region. So we have new all-time highs. Have we hit some of our deeper targets? So we were over here at the 38.5 region. We were looking at 38.6 to 8 next, and then 38.8 to 39. And, we're right in that 38.750 area on the highs today and pushing up right now. Looks good. And it is in the overbought zone. This is where the biggest moves typically happen. How can you gauge if it's, going to reverse? Well, on a move like this where we had expanded bands, when Stokes starts to turn, we're looking for it to mean revert. In this case, it's more about the expansion and taking out the overhead resistance, and it keeps doing so. So this resistance, it traded below for a couple days, tested a couple times at 38.100, moved through it, found support on it by the upper first, and then keep marking it up. Upper first area is going to be the next thing to watch coming into Monday and Tuesday of next week. That's at 38.286, likely going to be around 38.350. If that area is dropped, then we look back to 38,000 basically. If it drops that area, then we're looking to the basis, which is now at the low side support here. It's above it actually, but basically at 37,900 to around 37,800 on the lows here, which is the highs over here. So it looks pretty good. Weekly's probably getting hot to trot here, but closing above the upper first makes the upper second available, and that's where we're getting some pretty aggressive upside targets there above 39. So the next big area to look for from here is 38.8 to 39, and then the weekly is at 39.6, likely to go up another 100 points or so, 38.7 or so. This is beautiful expansion of volatility here of the Bollinger Bands. Now we are seeing that BBWP is in a bit of mean reversion right now, and that's because what Dow has been doing is playing in this upper first, upper second. So volatility cool down as long as it's above the upper first here at 37,630. Likely going to start moving that up to around 37,800 to 38K. As long as it's trading candles above that weekly upper first, its upper second is available to it. It is, riding the overbought zone quite hard here. 38,630 is going to be the number to beat. to keep that pointed up. You know, it's about an hour and 22 minutes. It looks like it has a chance to do that. So we'll come back to that on Monday and take a look and see where things ended up. That volatility expansion is the key right now on the daily. Let's go ahead and look at NASDAQ. Hey, look, NASDAQ moved right back to the highs. And did it make a higher high? Let's look. 17,674.23. 17,665. So no, not yet. But nice higher low structure here. Closing above the upper first, which is coming in at 17.5. Generally speaking, as soon as it gets above that high at 17,665, we're looking to the upper second. Somewhere around 17,850 to 17, you could call it 17.8 to 9. I would actually give it a little bit more of a range, probably 17.8 to 18 is what I would give it, as long as it's trading and closing above the upper first at around that 17.5 to 17.6. Below there, I'd be looking back to this higher low and basis band at 17.1 to 17.2. Daily's probably crossing back up. Looks like it's going to try to do that on closures above the 17.5 area, which is the upper first. So it looks good. SPY, that's SPX. Let's look at SPY. Made a new high. Hey, look, it hit 495. I said take it 5 points at a time, right? So we hit 490. We hit our 485 to 490 target, 495, 490 to 495 is the next big target. We have hit that by the upper second. Nice expansion. Next area is going to be 500 points to 505. And looks really good right now. So we can take a consolidation fib here as well, and kind of get a gauge for the continuation areas. Yeah, so the 2414 is at 496.35. I could throw some more extensions on here. It's not really worth it. But we can also take the move here. It's not necessarily going to replicate this move. But let's go ahead and just see some key areas here on this entire move off of the higher low in this case. So yeah, as long as it's above 480, it's looking good. That's the 382 down here. Looking fantastic above 485, which is 618. This move is powerful. Looking for some continuation. This is a very minimal downside shadow or wick on this, in this case, on the candle. Looks good. But likely to find a little bit of resistance around this 496 area. So that's that 2414 that we were just talking about from this consolidation. Beautiful, beautiful move. Weeklies looking good. Yep, so 500 points is the upper second. Closures above 493, going to keep stoke turn to the upside as well. And it's getting a consolidation while remaining above. It's getting price volatility consolidation because it's trapped in between the upper first and upper second. Upper first on the weeklies right there at 477. Looks beautiful. Looks beautiful. This move's probably going to continue. And again, like I said, the overbought and oversold zones are where you see the biggest moves. Again, this is a regular stoke, so keep that in mind. Regular stoke, very different than a stoke RSI. Stoke RSIs measure the velocity of RSI, whereas a regular stoke measures close over close price momentum. So that looks good, man. Let's see what Bitcoin can do, especially if it can maintain above the upper first on a close today. We'll see what it's got in store for us. So I see some NVIDIA talk and some Apple talk here. NVIDIA is where, you know, I shared a video from Heresy Financial that's it's a very popular thing to do across many assets, and even the indices themselves is 0-day expiration. 0 day to expiration options, and that's creating quite the run. It's basically a giant long position, forcing market makers to buy stock. But as soon as a bigger player comes in and crushes that, then the whole thing reverses. So, as long as they can keep doing what they're doing in that regard for the options side of things, then it's going to keep rolling. And they talk about crypto, about the volatility in crypto and Bitcoin and all this other shit. And look at the volatility in stocks. Especially, some of the bank stocks, they went so volatile they went to zero. Some of those regional banks. I don't have the tickers pulled up right now, but it's pretty ugly. But the Fed's gonna float them all and roll them all. More centralization, everyone. I know people are scared of centralization, but when you centralize things and everything's in one place, it's also a giant risk. So keep centralizing, keep doing it. I've discussed some of this with some of you in person and online, but the feud or the fight between Yellen and Powell is hitting a fever pitch, and she's forcing his hand. Just going burr on the short end and making it just unsustainable while draining the repos. So it's while commercial real estate's falling apart, and then the regional banks get sucked into the centralized system where the Fed is using the bank term funding program to flush them with liquidity and then equalize some of the books. The bigger players suck them up. It's all hooked into the Fed anyway. You get more centralization, which means way more risk. So we're seeing a centralization risk bubble. But remember, nothing bad could ever happen to the Fed, right? They're a government organ. Wait, they're not? It's a private company? Gasp. Yeah, anyway. Pretty scary for them, especially that Larry and the boys are all getting into Bitcoin now. It's almost like these bigger players are using some of that centralized cash to get themselves into a hedge play in case something bad were to happen. Weird, huh? Bitcoin will infect every part of the system. It's tough to maintain a centralized system when you have decentralized auditing of that system. You can still maintain the centralized system with a decentralized auditing mechanism. And then it creates a bit of accountability. It's going to take a while, though. This is just the beginning. The orange life raft. Yeah. Yep. So, I don't know what's up with YouTube taking likes away. I see the likes just going up and then going back down, and then going up and then going down. I'm not really sure what that's about. It's the same thing with, like, if I check their software, like my viewers, I can't see half of them, but through my other software, I can see all the viewers. It's really weird. I'm not really sure why that happens. But hello, Ivan. Yeah, Bitcoin hanging around 43K. we'll see what happens over the next day or two. Yeah, so the theory behind what Yellen is doing is really throwing all. Look, this prevailing theory by macroeconomists and most of them have connections to the Fed and the banking industry, which is, you know, propped by the Fed, right? The debt crisis in the United States and around the world right now is a paper crisis, right? There is no way here in the United States, I don't care how much you raise taxes, there's no way to pay that debt off, right? So the debt is going to continue to balloon. At some point, the creditors will not get paid. Now, the misconception is, you know, what's really happening is on the back end of things, when the Treasury is selling, you know, treasuries, well, what are they doing? They're guaranteeing an interest. You know, you're loaning fiat dollars, right? Well, who is the primary buyer and seller of these notes? It's the banks. But the tax base will never be able to pay the total amount of the deficit. So there is options for the Treasury to say, we can't pay these notes. Now that's chaos. But whose chaos is it? Well, it would ripple through the economy. It would hurt everyone involved, including all of us. But what would it essentially do? I mean, you zero the balance out and you just say we're not paying that back balance and we'll pay forward balances only. You would get stabilization pretty quickly, but who's left holding the bag at the end of the day? The Treasury? No, they just zero the balance out. They can do that. There's it can be done through executive order or congressional order, right? They can vote on it, and it is basically, you know, seeing things through bankruptcy. So there would be some sort of asset exchange, right? But who's left as the bag holders? It's the central banking system at the end of the day. So it's a game of chicken right now. Loading up the short end of the curve and keeping it front loaded like that is, and not even really putting out offers for bid on the long end, is forcing a repo reserve drain, which means that the Fed is going to be in a, oh my God, we're going to implode situation when they don't have really any power. I mean, their only power is like, if we go down, the whole economy is going to go nuts and people are going to get hurt. But that's it. Like, from the government position, from the Treasury position, it's like they're willing to accept that, the pain and suffering that comes along with that, which would honestly be short term. Maybe even, if you do it right, seamless. And then who's left holding the bag again? Oh, wait, that's right. The central banking system itself, which would implode. And of course, you know, when you see the implosion of fiat currencies, which, by the way, when you see them implode around the world, that's part of the central banking system. It's just that right now, Western nations, and even China and Russia, they all count on the dollar. The dollar is the most widely accepted form of fiat currency in the world. And they're all wrapped up in this bond market as well, in the treasury market as well. They're all wrapped up in these, we're all intertwined in each other's trade markets. And that being stock markets and physical goods markets, all of that stuff, right? So, the game of chicken is really on the Fed's side right now. And why would they be concerned about what Yellen is doing to them? Putting them in between a rock and a hard place, basically trying to force them to QE, not just cut rates, but QE as well. She's not just trying to force them to cut rates. Cutting rates and QE, tend to go hand in hand, but they are not the same thing. Because typically when you start QE, the Fed is buying. Okay, they're buying down the rate. And in this case, why would they be concerned about this? Well, because if it pushes inflation higher, then they're right back where they started, but with no political advantage, no one else to blame, right? They could point the finger at Yellen. She'll just be like, nope, the market doesn't trust that we can pay back our debts. So they went all short term. And they'll be like, well, you're just offering short term. That's the only auctions that are getting, that you're even getting out there to institutions. And she'll just be like, well, we have to do something about either restructuring the debt or, it's a showdown. We're either going to restructure the debt or you go away. Everyone gets hurt if we don't figure this out, right? But you see the other side of this building. The Fed wants a solution to it, and that solution for them is to move over to a new monetary system. That being a digital monetary system with the same name, right? It's digital US dollars, CBDCs. It would still be, their Fed Now program, all of that stuff that's already kind of running on its rails are running in the background, but not to the extent of, a massive rollout here in the United States. What would end up happening in that case is, they want a solution. Sure, we can do this if you do this, but their solution isn't ready yet. So she's putting a lot of pressure on them to cut rates. I mean, obviously, election year. Turns out that the current administration isn't doing so well right now on any front, whether that's on the international front. The people within the administration's own party do not want anything to do with the administration and are actively campaigning against it at this point. I mean, governors, mayors, and the like. Of course, the latest thing being the southern border here in the United States. But that's just one of many issues that Democrats are not happy about with the current administration, and of course, Republicans are not happy about. Independents are not happy. Nobody's happy. So are you going to try to, basically gussy things up again? Like, look, if we QE, rates are coming down. Things will get better. We're going to see some easing. But what does that do? As soon as they do that, right, they're absorbing all of the risk from these smaller banks that are having commercial paper, holding back commercial paper. So they're already absorbing all of that. It's just a number on a balance sheet kind of thing, but they're still absorbing that risk. So it's still there. It still has to be reported. It still has to, it's still overseen by the congressional oversight committees, even though, many of them are beholden to these same people anyway. But you have a scenario where the game of chicken is multifold. If their aims align, they're going to go CBDC. There's going to be a bit of a debt jubilee. I don't think we'd see debt jubilee in its entirety. It'd be a rollover and a restructure into a new system. Now, they could also debt jubilee into a new system as well. But you're going to see that these narratives are really going to start developing over the coming years, no matter who is in charge of the District of Columbia here and the federal government from the executive branch. Doesn't matter if it's a Democrat or a Republican or an independent, or if it's me or if it's you. Doesn't matter. These things are all going to be at the forefront of what is being talked about. And it just so happens that you have viable hard money options. I will tell you though, if you're a Bitcoin maxi, you're not going to go to the store and just start buying things in Bitcoin. You're not going to buy and sell things in Bitcoin through regular retail markets. There will be a fiat equivalent of anything that is being done. I mean, the goal on the back end right now is hook CBDCs and then partially back them. That is the real goal, just so you know. And that is to get the satisfaction of the more libertarian republic. It's like meeting them in the middle will partially back this stuff, but it's nothing. It leaves nothing, right? And the danger for those of you that are Bitcoin maxis, look, I could be considered a Bitcoin maxi myself. The danger right now is, and this is something that you do need to understand, the danger right now is that Bitcoin starts infiltrating the system, and the narrative shifts over the coming years to Bitcoin should be backing the currency, maybe in its entirety or a combination of Bitcoin, gold, silver, whatever, the whole rainbow currency crowd with, a Bitcoin back end. Well, in order to do that, they would need to fund it, right? In order to back it, whatever you're going to put out there, you got to back it with the funding. And that's where this could turn very, very ugly. So that's where you could see seizures of people's personal Bitcoin, right? That is a risk. Do you need to understand that? So even though those conversations, when they do eventually happen, those debates, you need to be very cautious and understanding context. Because where are they going to buy all the Bitcoin from? Who's going to sell Bitcoin to them? Like, they're going to mine enough? Where are they going to get this to back a fiat currency? I still do believe, though, that Bitcoin will infect every single facet of the energy output of society itself, not just energy production when you think of electricity, but the energy output of society. It's going to be in everything. It'll become the base layer, but you can't do that without infecting the system, the corrupt fiat system that is where we are all living right now. He says, when did we ever get something from them? Who's them? Look, the measure of prosperity right now, for a lot of people, we're since 2021, post COVID. COVID was kind of chill for most people. But after, in 2021, when the current administration got into power, things went shit sideways for just about every person on the planet. And coordination or not, doesn't really matter. People feel the pain even though they see stock markets going to new all-time highs. Today's job numbers, what are they not telling you? Well, all of the new jobs, all of that job growth is part-time. And or, if it's not part-time, a large portion of it is non Americans. So it's one of those things where you really gotta think about, like, people are hurting all over the place, but they're seeing this like other world happen, and it really reinforces that dichotomy for both the left and the right. The left in the United States and around the world typically is like anti-establishment, even though they support the things that the establishment does, but they're in their heads, they're anti-establishment. They're anti-rich people and billionaires, and it doesn't really matter what kind of economic system they think is best. Doesn't really matter that they support all the same corporate overlords. That doesn't really matter. Then you've got the right, who hates everything about the centralized power systems, right? They're both seeing the same things, and the right is just as guilty as the left on many of these things, right? But the reality is, everyone is seeing the same things. They're seeing this gap between the elite class, the managerial class in every country, and the regular person. And often what you see is that managerial class used to, the elite class used to just make up the billionaires of the world, right? But now you have a bit of a shift where that managerial class is no longer just the billionaires of the world. It's the supposed leaders. They don't even have to be billionaires, right? They are the ones who have the power to do something, and they're not doing anything for the regular people. And you're seeing this movement out of what is being viewed as the elite class into the adversarial class from the elite class. So you're seeing elites that used to be part of that system move out of that managerial class to become adversarial, or basically what it appears from the regular everyday person side of things on the left and the right, depending on your political views, in many cases, is seen as this person is on our side now, because they recognize that the elite managerial class has become the power structure managerial class that is simply in power to maintain and grow its own power. And this is going to become a big and bigger issue. Running into the 24 election here, you're going to see all kinds of crazy shit that is going to only reinforce what I just said about that. But then there's the prosperity side of things. Everyone is hurting right now in one way or another, whether it's taxes, whether it's energy costs, whether it's food, whether it's just general living, cost of living for areas, even in some of the most poor areas in the United States. The cost of living has gone up 150 to 200% or more. Now, a lot of that is driven through energy costs and food costs, but this gap is going to continue to grow to the point where it's like tug of war, except the rope snaps. And once that happens, it's going to be not physical war, but all out war. You're already seeing it bleed into your everyday life. The war against media, the war against, people aren't satisfied with any of these things. And the root of all of this is the unchecked corruption that is, made possible by fiat currencies at the end of the day, because there's no accountability. So it's going to take a while to get and maintain that accountability. And it's going to take strong leaders to do it. Doesn't matter which side of the aisle you're from. If you want to see something done, you have to have somebody that can remain uncorrupt while being strong in the fight. And we've observed so far, especially these past 3, 4, 5 years, there's not a lot of powerful spine holding people. Most of them are spineless. The moment they're challenged, they'll flip, or they're, influenced by money, or they are influenced through blackmail or through incentives, or incentivized not to stand up against the juggernaut. Doesn't matter, Ivan. Doesn't matter who wins. Path is set. Head-on collision. No matter what. Doesn't matter who wins. Optics are the only thing that will be different. Who do I think will win this fight in the end? Look, the little guy. The little guy will not win if people just sit on their hands the whole time. There's steps that people can take, and you're seeing some of those steps being borne out through the desire to get into things like Bitcoin. Look, I know the ETF wrappers are not what people want, are not what people, Bitcoiners want, right? But it's an easy mechanism for people to get in. It's easy access. It's easy to lend or borrow against. These are all things that are not, it's easy to hold. You don't have to do anything. You just buy the ETF and you can hold it, right? Options trading should start on them soon. But the point being is, you got people, there's a massive demand for it. And the demand isn't just being driven by the big guys. Remember, the big companies that everybody talks about, your BlackRocks, your Vanguards, all of these companies, they drive direction, but it's assets under management. A large portion of their assets under management are, they're managed. They're the ones managing them. So they do get to direct the liquidity for those portfolios, but it's not their money. They make their money on the arbitrage. They make their money on their fees. So the big thing about that is when you understand that it's not their money, they define the direction, because in most cases they're managing what? Passive portfolios, meaning that the investors are not active, right? Some are, some aren't. But at the end of the day, it's not their money. It's all about creating income via managing that money through arbitrage and through management fees and many other ways. But the big thing is that understanding that is an easy way for the average person to get into Bitcoin. The desire has been there, but there has not. Look, even just to go and buy Bitcoin, there's many different ways to do it, right? Some easier than others. But if you really want to understand Bitcoin and you want the lowest impact, okay, I bought this Bitcoin, now what do I do? Where do I spend it? Can I get a loan against it? Can I lend it out? Well, none of these things are available as it stands right now in viable ways with Bitcoin self-custodied, right? That these things will become available, but they're going to be complex things for more advanced users of Bitcoin and more advanced holders. Whereas ETF is very easy to do these things with. You have options. You have leverage. You have control. And while getting into these ETFs, which are having, by the way, it's historic what they're doing, by the way. The numbers that they're doing are absolutely historic. But that aside, for ETFs in general, most people that are disappointed by what's happening want to see this instant collapse of the Fed and everything else. That's not how it works. And you don't want that realistically, because where the freaking hell are you going to ever use your Bitcoin then? You need it distributed amongst many different holders. Oh, well, it's all in one custody place. Da, 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 da. It can be easily seized by the government. Yeah, sure. And the government can easily come to your house and shoot you in the face. Doesn't mean there's always risk. And if you want to hedge against that risk, you hold your own damn Bitcoin. But the thing about this is like, you know, what we're seeing in terms of the Bitcoin ETFs, the big 9, as they keep saying, right? Well, they're doing bonkers numbers. If you take them in aggregate, it's the biggest thing to ever happen in traditional markets. Okay, it's not even close. So the demand is there, and the demand is not manufactured. They're barely advertising this stuff. It's that the demand was there. They are now meeting that demand while advertising to build more demand. And this is going to be a slow roll into those things. And this is the market and the general economy, the general unhappiness with the powers that be, and this widening gap between the managerial class and the regular everyday person. And the regular everyday person can be a very wealthy, rich person. But the managerial class, remember, they're the ones that are in power, whether they are appointed or elected. And they are, you know, this is a bit of a rebuke against them. And some of the people that were once on their side are starting to abandon them. And this is how we're going to see the propagation and proliferation of Bitcoin throughout society in general, before it becomes the base layer of society that things are built on. Almost like a transparent layer. This is where things are going. There is no stopping it. You can doubt me, you can make fun of me, you can say I'm crazy, that's not going to happen. Bitcoin becoming the output energy of a society at whole, meaning everything that you do throughout your day produces some sort of energy that either contributes or takes away from society in some cases. But in Bitcoin will be at the base layer. And it's going to be integrated into everything eventually. And you might think I'm crazy, but it's going to happen. A lot of the bigger pieces are going to happen sooner than a lot of people think. Because the thinking inside of the industry, inside of these trading firms, inside of the prop shops, trading firm, prop shop, inside of these portfolio management companies, is that there is going to be an end to the feasibility of, you know, the way in which the debt cycle operates. I'm trying to be careful in choosing my words here. And they need options to move no matter where things go, because it is uncertain and things are hitting a critical level. And they can remain uncertain and be critical for a long, long time. Just like Stoke can hang out in the overbought and oversold zones for way longer than you think they can, things can remain at critical levels on the macroeconomic side of things for a very, very long time. But when it does come crashing down, it's either going to be, you know, have I given myself as a participant in that system enough of a way to transition no matter which way things go, or have I not? Because that's going to be key to survival. And that's why you're seeing the things that you're seeing with the ETFs. That's why you're seeing everyone flip on like they hated Bitcoin till they love it, and it's freedom money. It's a hedge against the inflation. They're not even saying hedge against inflation. I think BlackRock came out and they were saying they're pitching it as, you know, basically a hedge against the dollar, a hedge against the Fed and the Treasury. You know, they're pitching it. The way that they're starting to propagate it is like, this is better. This is going to be better for you than bonds. And because they also know that once rates come down, they need another alternative that's rising. So when the effective yield comes down, I will tell you right now, when the effective yield comes down, they're not going to roll you back into bonds. They're going to roll you out of them into more risk, right? So but people want stability, right? So maybe they roll into more risk, but that risk is, plays on stocks and companies and corporate bonds, which are a little bit more risky depending on the company. And then bring you into what can be considered something that was once risk on, now transitioning. Not only will it be rocketing to the upside, but also transitioning to being seen as more of a hedge against, and a hedge against the dollar in and of itself, as it will start to inflate again, and a hedge against the entirety of the system itself. So it's got a few different benefits that can be pitched from that line of thought. I mean, they're already approaching this from the bond buying angle, because they're going to roll out of the 6 month, year, 2 year, 5 year, 10-year bonds. They're going to roll out of them soon. It's just a matter of timing, and this is their run up to get something else in place for the transition over. Hello, Baba. Hello, Sam. How you doing? Yeah, I do think that's going to do it for me today. We've been on around 2 hours. For those of you that did join late, the DVR feature is available, but as soon as I end the stream, you can just replay it. Skip around as you like. I am going to leave the stream on for a little bit for those of you that do like to chart and listen to a little bit of music while kind of reviewing what we talked about today on the stream. Let's do about 10 minutes on that. So, yeah, we're gonna wrap this up. All right, guys. You have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe, and of course, as always, stay safe. With all of that being said, Landy out.
Forces has announced that a flying disc has been found and is now in the possession of the Army.
CBR Street Gang, over by 85, over.
Yeah, you really doing that. Southbound here for the